The ride-sharing giant announcing on its call with investors it is moving up its target for profitability by a year. Looking at that stock up a little over 7.5% just this morning. Joining us right now for an exclusive interview is Uber CEO Dara Khosrowshahi. Good morning to you.
Good morning.
Thank you for coming in. Let's walk through, if you could, for investors so they understand how you think you get there. And when I say get there, I'm talking about profitability.
Well, as we made through our way in 2019, we became more and more confident of the strength of our business and the ability of our teams to execute. And if you look at our rides business, for example, in 2019, for every dollar of revenue growth that our rides business achieved, they dropped about 80 cents to the bottom line. So this is a business that, as it grows, can become quite profitable. And for 2020, we got together as a team and said, you know what, we can do the same thing, not just for the rides business, but for the whole business. So if you look at our plan for 2020, for every dollar of revenue growth, especially from Q4 to Q4, we expect to drop 50 cents to 55 cents to the bottom line. We think that's absolutely doable to get to profitability by Q4, but at the same time, make the kinds of investments that we want to make to keep a high growth rate for many years going forward.
I want to talk about those other investments in a second, because that's going to be an issue, or at least a question mark in terms of how you get there. But in terms of the rideshare business itself, you've talked about pricing and increasing pricing. And one of the questions I think that investors have is about your ability to grow, what the total addressable market looks like, especially if you increase prices, meaning doesn't the market itself shrink in terms of what's available in the future?
Yeah, so I think there are different ways of increasing pricing. There's certainly some pricing power that we have in the mainline service because it's a service that people use every day. And frankly, it's a service that's very well priced and it's a great service. So we do see some pricing power there as well. But there are different ways of increasing pricing. So for example, going after the premium segment. Our U4B business now is a run rate of over $1.2 billion, growing over 50% year on year. We're getting into Uber for Health, growing over 300%. So that's a way of increasing the average price of the service, but really going after a more premium customer.
You know I'm cheap. So when I get in a Uber X, is the price going to go up on me? Is that what's happening here?
The price on average in New York is going up because of some of the TLC moves that they've made, not necessarily because of our pricing. So New York City prices are up. It's not something that we necessarily like, but it is something that...
I feel like the battle between you and Lyft, at least in New York right now, I'm not getting the promotional pricing anymore.
Well, I think that...
Sad for me, maybe good for you.
You know, hopefully good for all of us. I do think that the era of only pricing to win business is over. And I think it's leading to the era of actually having a great service. Innovating, for example, for us on safety, making sure that every single time you take Uber, you've got your safety area, you can text 911 if anything happens, you can have someone track your ride. We think you should price based on service, not price just a discount.
We talked for a very long time. It felt like a year ago, one of the big strategic efforts was around the pool service. This idea, if you get everybody in the vehicle, that's where the money would be. It doesn't feel like that is working at the moment.
So the pool service is absolutely working in terms of getting more than a person in a vehicle allows you to essentially discount a ride based on the greater efficiency. You have 2 or 3 people sharing a ride. We were over discounting. It was an easy way for growth, and our CFO Nelson Chai talked about, hey, we're not going to grow with empty calories. So with the pool service now, we're pricing pool at closer to its natural price point. And actually, we're now innovating. For example, one new feature that we're shipping is, it's called Uber for Less, essentially last in, first out. If you want to get an Uber X and you're cheap, we'll offer you the opportunity to get in last, get out first. You get a discount on that ride, and essentially then you're riding with a pooled rider. So it's a win-win. The pooled rider was going to pool anyway. We get essentially, there's no car, so traffic is lower wherever you're going, and you get a discount. That's a win-win.
Let's talk about Uber Eats, because that's the other major growth piece, but also money-losing piece. It lost $461 million for the quarter. That's on revenue of $734 million. This is such a competitive space. There's talk about consolidation. What do you need to do to get it to profitability, that component of it?
Well, we need to grow and we need to consolidate. So the business now is at a $13 billion bookings growth rate. It grew 70% year on year in terms of bookings. It grew over 150% in terms of revenue. For a scale player, we are by far the fastest growing. That's a good thing. At the same time, what we've committed to is to get to number 1 or number 2 in every market that we compete in 12 to 18 months, and you see that happening. So, for example, in India, where we had 2 very strong competitors, we decided to sell our business to one of them and partner up with Zomato. Zomato and our India Rides business are going to work well together. So there are going to be some circumstances where we sell. There are going to be some circumstances that we buy. But the business is very healthy and growing, and we're quite optimistic about it.
There are some investors that are worried that you may have to overpay to pick off some of your competitors. How are you thinking about the consolidation aspect of all this?
I've been in business for a long time, and no one has accused me of overpaying. You know, we're going to do smart deals.
You're cheap like me?
Listen, if it's a great company, we'll pay up. But our plan A is always organic growth.
Right.
So as long as organic growth is plan A, plan B, which is acquisitions, is always going to be opportunistic, and we're going to be quite disciplined doing so.
But tell me how you think about DoorDash. Tell me, there's been talk about, what happens to Postmates, which was thinking about going public. I think was trying to sell itself, frankly, to companies like yours. Just take us inside the room in terms of how you thought about that thus far.
We think about all those circumstances, but up to date, we've made the determination that the best way going forward is to do so standalone. We bought a company, or we're signed to buy a company called Corner Shop, which essentially takes corner grocery stores and we'll put them on our platform. So we will buy when we see something new, when we see a team that's particularly talented, but we're going to be pretty choiceful when we do.
Do you anticipate getting out of other big markets? We talked about India just now. Should we be surprised over the next 12 months if there's an announcement or two about a big market where you say, you know what, no more?
We're going to be pretty disciplined.
But how many more markets are there like that are on the fence right now for you?
We are number 1 or number 2 in over 50% of our countries. It represents the significant majority of our bookings. But that does mean that there are some countries that are in the bubble. And we either have to see a clear path to number 1 or number 2 in profitability, or we're going to look to consolidate.
We had some analysts on in the last hour who talked about the prospect, it's really the option value, on potentially creating a super app, a la what you see folks like Grab doing in Southeast Asia. This idea that in markets where people are touching your app every single day, that you can layer on all sorts of other services. How do you think about that right now?
We think it's a huge opportunity. So the average Uber user uses us 5.7 times a month. When the number of users that use more than one service has increased by over 50% year on year, and they use us almost 16 times a month.
Right.
So the frequency increases by 3 times. We're absolutely exploring the super app concept. If you come on Uber, a lot of times we'll invite you to order food, et cetera. We've got scooters on the app. We've got transit on the app. So we're trying to make the app essentially your everyday use case.
Is that going to be a global thing, or is that in certain markets where you think there's an opportunity? Because right here in the United States, you'd think if someone was going to create a super app, you would have thought Facebook would have done it a long time ago.
Every market is different, and we want to make sure that we reflect the needs of that market. So I do think that the super app concept is going to be market to market. In the Middle East, Kareem, who is part of our family, is going very hard against super app. So sometimes we'll have one of our subsidiaries actually go faster so that we can learn from them. And in the Middle East, you can see the super app concept move very quickly.
Okay, while I have you here, I want to talk to you about the impact of the coronavirus, given your global scale and what you're seeing. Also, I noticed that you had shut down some drivers on the Uber service in Mexico as related to the coronavirus. What are you seeing as a result of all this?
So first of all, anything that we do is based on the advice of health authorities, local health authorities. We don't try to do our own research, so to speak. We want to be very diligent. We're not seeing a significant effect on the business overall. Where we see an effect is in North Asia. For example, business in Hong Kong, airport business is down pretty significantly. From an overall standpoint with our portfolio, it's not material in any way.
And do you hear, what happened in Mexico? Can you speak to that? Do you know about this?
Yeah, a couple of drivers were suspected to have had the virus. So out of an abundance of caution, we looked at who rode with them and took them off the system to make sure that they're okay. Now we think that things are now returned to normal. But again, we the data that we have allows us to create a great service, and this is an advantage. It's not how you want to use the service, but it is a potential advantage.
Talking about the data you have, I have a privacy question for you, which is there was some news recently that there was a passenger who was a CEO of a company in Arizona who was filmed inside a car with a racial epithet. I don't know if you saw this news.
No, I didn't see it.
And they were fired from their job,
wow.
In large part because it was captured on camera by an Uber driver. What kind of privacy expectations do you think a driver should have today, rather a passenger should have today when they get in the back of an Uber?
Well, the laws, the privacy laws in every state are different, right? I don't know specifically what the laws in Arizona are. And there are some of our drivers who have their own security cameras for safety reasons, et cetera, and it's totally understandable.
And do you want those in all the cars, by the way?
I think it's up to the driver whether they want them in all the cars. We are working on, we're testing systems where you can record a ride, for example, in Brazil. During those circumstances, we want to make sure that both the rider and the driver know exactly what's going on.
Right.
And we want to make sure that the data doesn't rest with either player, rests in the cloud someplace, and is only accessed when needed. So I think these privacy issues are complex. I think disclosure is incredibly important to the extent that it moves safety forward. It's something that we're going to be researching into.
There's always a Travis question. I know you're almost done with the Travis questions now that he's out of the stock. One is, I don't know if you noticed, he effectively left $1 billion on the table.
I think he did pretty well, and I think he deserved to do pretty well based on being a founder of the company.
And the other question I was going to ask is, he's building a new business that effectively is about making food for delivery. Do you ever anticipate being back in business with him?
We do business with restaurants. The more restaurants there are, the higher quality restaurants, the better for us. So we are doing business with his cloud kitchens right now.
Right.
And based on what I hear, that business is going to grow.
Okay. Dara Khosrowshahi, thank you for coming in this morning.
Thank you.
Very, very good to see you.